Welcome to TradeTheMBI.com. This is John. This report is for the 1st of July. And, well, interestingly enough, we got more of a continuation move exactly within our expectation of it. The problem, what we do see here now, is that if we don't see a rise in our green at this particular point, and we're also seeing, red very close to dipping below the white right here if we look at the numbers, could start to pose a little bit of a problem, particularly since we're already going to make a lower pivot with the green in that. So we could see a top out a bit that gives us a pullback, which would not be surprising given what we talked about, increase in volatility leading up to Epihelion, or the 4th of July. Well, in this particular case, it's the 5th of July for that celestial event, which happens every year. Let's look at the daily, because this is significant, because we talked about this the other day. We had the Starhawk, Ironhawk. We knew they were going to combine at the discount from here, and we were looking for somewhere around 1955 for them to want to sell out, and there it was, 1955 and a quarter. What does that do for the NBI Opus program? Very close to all-time equity highs. Just within a fraction. It's about to break over there. I think this previous dot was just a couple of $1,000s higher. So, I mean, again, it continues to show that just, constant move higher. Significant number of trades. I mean, this isn't something you can discount when you're plus 400 trades. And then we can even look at periodic returns, which give you, your last 12 months, and then obviously for the beginning of the year. And then this has been a rough year in general, just because it's been one directional. There hasn't been a whole lot of movement, which the system really works better on market periods that are going up and down. Plus, we've noticed a couple others that we looked at that were like, well, we would have taken gains and not been in the same negative situation that a couple of these turned out to be. So in that sense, we did and can trade it even more effectively than the program, but needless to say, the program at 3.0 profit factor is doing just fine. Speaking of spectacular programs, you get that from a daily intraday. We can see that the NBI PowerMo Opus 2 doing just fine in the middle of that trade. And again, we wouldn't have been fooled by this setup because we knew it was coming down, so we went in and took profits on that one. I'll go ahead and show, because I've now lightened my load down to just the two contracts, the 20 that are represented here, having been in a much larger position, taking significant gains off that. You can see some of the new stops being set up there. It's all the way up to 1950 at this particular point. And interestingly enough, with the rising cyan, it doesn't bode well, particularly if it breaks out past this previous level, 1.15. We're at 1.18 right now. So if that holds up and closes above there, you're automatically going to have a higher cyan pivot. And particularly with steel in that, not in the safety zone and rising, slight fade in red, and look out. Now, if we look at the performance report for this one, we are at all-time equity highs. The current trade, as it is now, will definitely push this all the way through to new highs. And from its periodic return, it's significant comparatively. But you know that, and that's the thing about the intraday, and then utilizing the daily in a broader sense, because it's a little bit slower, more methodical. Diversity in time, completely different setups with those. All in all, fantastic. No differential. The NQ, though, actually much better than the S&P. As you can see, reverse situation between the cyan and the green compared to the S&P, worth noting. And more bearish from the YM. So Dow is the ugliest, but getting oversold. And then you have S&P, and then you have the NASDAQ being in the best condition so far. Bonds continuing to go back and forth, but that's looking more like a sell signal at this particular point. I would be starting to move up to the yellow on the ABM from a stop standpoint. Oil, likewise, getting into the oversold condition from this very deep steel, which bodes well for it. It just have to wait for the finalization of the seller 14 and see a new series of buyers come in, but it's held up quite well within that general ABM. And then interestingly, you know, with a nice spike in gold, but we were talking about, it's making new highs with the red. So the red's still predominant. The green now has dipped below. That's a little bit more on the bearish side. Still in the safety zone. Going to be watching this very closely because continuation of cyan pressing forward, we would begin to start seeing a return in there, and then it'd be the time to set up our ABM. Don't have it on this list. It's probably on the full one. I'll put it on for tomorrow's chart so that we have it, so that you'll be able to see it rolling through. And then the euro has been making a slight pop. It's just been the red slowly increasing. Still relatively bearish. You're just waiting for the steel to dip below the cyan before you get more pronounced bearish move. And it's edging closer to that overall orange target, which was 1.371. Not too far away from there. Nice easy ride. Nothing special on it. AIG forming the first beginnings of what will be the potential for a turnaround. And again, very easy to play these kind of setups because I'll just pick the close, and particularly when we have red candle, I like to look for all the moves that continue to head towards the lows, and then just continue to lower my entry until filled. And then even then, it's just a matter of monitoring intraday signals on it because this is still within a sell configuration. You need to see the red pivot up as well as the green, but you want to be ready for it because they can happen quickly. Yeah, and X is not looking all that terrific here because it's just sort of flatline. So just going to hold up. I would be up at the yellow ABM at this particular point on it. And that's the flexibility of changing between the stop lows. Some people say, well, once your stop's up at the higher level, you never want to change it. Well, that isn't really the case because if you're in good buy configurations, there's no reason to keep it tight because the volatility of those, they're purposely going to hunt some of those. But when you're in a bearish configuration where you have cyan leading like this and you're about to get a steel dip below it, that's going to be a negative. So in this particular case, with CLF, you got to be more cautious. And those become the differential. The nice part with that one was that beautiful rising red. When it gets rising like that, you get the nice momentum, just like here with JCP. Is it starting to wear off? Just a little bit, but again, you well above cyan in safety zone. You're going to need to see that cyan move above there to suggest that that's going to be a significant retrace on it. And then WLT, which gave you the clear signal of the retrace down to there. Put in a little buy signal at this particular point. You can see how effective those tend to become within the configuration, but it looks like it's not going to survive. Worth noting. Let me take a look at some of the alert stocks too while we're at it. Apple we liked. Easy one to continue to buy with that setup and doing just exactly as expected. Amazon doing absolutely nothing, which fits within the expectation. I mean, it's just a flat line there. So what are you going to get? You're going to get a whole lot of nothing. So if you're trading options with that on that kind of chart, it's just not going to work out very well for you. And a lot of people just don't understand, you know, what they're looking for. What we really needed to see was this, you know, steel dip below, and then when you get that cross back above with it, you've got yourself a momentum play with it, and you're going to get some action for it. And in this particular case with Baidu, worked beautifully. The FAS, as long as the FAS has been holding up, we liked where the market's been going. Got into a malaise point and then went a little bit negative right here in the last few. Still a bit negative, though. You've got the number one right there. You pivoted also above. So previous day, you had everything pivoting in the right direction. Going to need that continue and get the steel above cyan and start to get a turnaround. Particularly now you have to have the green move above red, because if the green pivots lower, then I would expect these lows to be taken out completely. And that will not bode well for the market. The market will not hold up under that kind of configuration at all. So there you have Facebook's just nice little rising red. Everything's been green from way back below, and that's just because you had the dip here, so you're expecting more of the momentum, the exact opposite of what you saw on the Amazon chart. And likewise, Google had it happen back over here in the red, and then it continued for the buy signal there, and then the green finalized the crossover, and it's continued. Starting to get back to a key vortex point right there, so I'm going to have to be a little more cautious with that. Still, I would be more likely at the white zone for my ABM at this particular point. Needs to give it a little bit more room, but intraday is certainly easy to follow. what its play is. We've liked Netflix for a long time, so let's see how that one's moving along. No particular issues. In fact, it broke out yesterday with the pop of the green moving above here and being well within cyan lower. So would expect a decent move from that. PCLN had been in a negative configuration from the deep red, looking for those levels to get retraced. You've pretty much got to get back to this initial one where it closed right there at the 1196, closed at 1203. What was the low? 1202. So potentially has a little bit more. In fact, you had a lower crossover and the higher move with the green. I mean, theoretically, that should continue to head a little bit lower. I know that's contrary to what everyone insists must happen with it, but nothing I can do about that. And Tesla has been in good shape for quite a while since the breakout. We had a recent move of the cyan coming above, but it could not hold it, and within that safety zone, so still been all red all the time, very positive. No issues with that, pretty easy and straightforward, and it's just been a steady glide. At this particular point, again, you have the steel dipping back below, so again, if green moves back below and comes back above there, you'll end up with another buy setup from it, and moving along nice, be it white at this particular point as well, or magenta, whichever one. They're pretty close to the same. What happens with them is they start to move up and they break into the new zones, they end up plateauing, and that makes it easier to gauge them. Love it when it's that easy. It's not always going to be that easy, but while it is, take advantage of it. You can see the broad mix, and again, this mixture of buys and sells is healthy for a market that is stable. It just means you are, though, going to have to pay attention to which ones are in the buy and sell mode. If you're trading the broader index, not as big a deal, but we know which index is looking the best, and that happens to be the NASDAQ by far. So it's worth noting. And here's a bunch of the high flyers. And there we go with those. Did I do the NASDAQ? I'm going to do it one more time just to be on the safe side. Because there's some potentials in there that are just about to break out, and you can just go through and pick out which ones are the healthiest. It's important. I'll leave us with our daily chart right there. So there you have the general scope of it. I'll probably start running tomorrow after we see what happens today. I'm expecting a little bit of more activity for Tuesday, and at that particular point, then we'll see what the general setup heading towards the fourth holiday is going to be, and that should give us a little bit better cue as to low volume shenanigans that might take place. And we'll just play it as it is. But for now, closed out our longs. We'll look for any new signals that pop up. But the 50K is still doing its thing, and as I showed on there, that stop rose all the way up to the 1950 level. And in this particular case, sell signal that comes through on a dip there would qualify, because with the cyan and steel rising separate of it, not exactly the most bullish. The fortunate thing for it, it's coming off of a cyan candle, so that should expect at least the pre-market bar. We don't know where that's going to be by the time market opens, but we'll go from there. As always, look for me on the private Twitter feed, StockTwits. Trade well.